Hey everybody, it's Ken. So thanks again for watching. As you guys know, like the big question right now is, what's happening with real estate? Everybody's trying to buy, and I'm telling just hold on. Like, you don't want to catch a falling knife. It's only been 2 months since this whole thing started. Well, I'm afforded the opportunity to be able to get on the phone with tons of lenders, tons of investors, and some of these big thinkers that are, trying to strategize on what's happening next. Like the National Multi-Housing Council that's basically surveying 11 to 15 million apartments every single month and all the different things that come with that. And so it's been great to kind of sit back and talk to different owners and investors as to what they're seeing, big picture. And these are owners of commercial office, owners of retail, owners of malls, certainly owners of multifamily, which is heavily what I do, and a lot of single family guys. And so basically, I've come up with what I think are 3 big trends that will impact real estate right now. Now, these of course are just 3, and there's lots more coming. But let's just talk about the 3 that are super apparent right now. Maybe some of you have already thought about these, but I'm going to tie them back to real estate so you can kind of get a feel for, how we're all looking at this stuff right now. So let's first start with what I would call the migration patterns, okay? So migration patterns are basically what's happening with people. Now, if you take it out internationally, migration patterns could be immigration. It could be people moving in, moving out. But basically, that's all it is. There are migration patterns of the population, and it's a really important place to start because the big question mark is, where are people going? And that's what people want to know right now, because once you know where people are going, then you can make really good decisions when you're buying or investing later. So let's first talk about what migration patterns look like. So the first thing is, this is a typical migration pattern by state. As you guys can see, the top inbound states were Idaho, Arizona, South Carolina, Tennessee, and North Carolina, okay? Now, these are not even 1 year ago, okay? So for whatever reason, which we'll go into later, these states attracted the most people, and there's a reason why, okay? Now, let's talk about the states that were losing the most people. Illinois, California, New Jersey, Maryland, and Pennsylvania. There's also reasons why, okay? And we're not gonna get political here. We're just gonna say these are the numbers. Now, the interesting thing is these numbers are actually pretty easy to figure out. So if you're in the real estate business and you're trying to figure out trends, this is very important. If you're investing in Illinois, for example, in the wrong area and people are moving out of that area, then what doesn't matter if it's commercial office, doesn't matter if it's retail, doesn't matter if it's multifamily, it might get affected. Not to say there aren't great little cities inside of Illinois that might be growing, but generally that's not good when you have those kinds of outbound numbers. Now, there's all kinds of ways to figure this out. One is just the census tract, okay, which is updated regularly, as you know. But there's a bunch of other ways that real estate investors take a look at this, especially guys like me. So I like to track out-of-state driver's licenses. That's a really good one. Okay, so if somebody from Illinois moves to Idaho, they have the state requirement for them to turn in their change of address, get a new license, all that stuff, and they relinquish their Illinois driver's license, and that's a statistic, okay? Same thing going the other way. All right, so that's one way. Another way are U-Haul trucks. Another way is North American van lines. If you want to take a look at some really cool statistics, just take a look at North American van lines. Last year, they had 77,000 moves, and they all knew where they were going. So those were destinations that people were moving to, okay? Same kind of thing, but there's all kinds of data around this. It's a great thing to watch because if you guys are investing, you want to invest, obviously, to states that are doing well and are, being progressive for one reason or another. Now, those are high-level statistics. Nonetheless, they're really good ones that you should be looking at if you're investing or you're raising capital to invest, are the migration patterns. So we're going to go into those a little bit more now. So back in 2019, this is pre-lockdown. These were the states that everyone wanted to live in 2020, okay? So this survey was done in the first quarter of 2020. So we're just going to say that this obviously was pre-lockdown. Now, here's the interesting thing. Back then, in the first quarter of 2020, we had all kinds of statistics. We had Arizona as number 1, which just happens to be where I live, okay? We happen to have Idaho as number 2, which is actually where I spend my time in the summer. We actually happen to have Utah as number 3. We actually have Washington as number 4. You get the point. Okay, now we'll take a look all the way over here. Guess what this is? So this is New York, the state of New York. Okay, so these are all ranked by people moving in and people moving out. That's all it is. Okay, the stats don't lie. You saw me do, it's just math. Well, this is just math. These are just people moving in and moving out. And there's a number of reasons why. And a lot of the governors that are progressive are trying to get people to move to their state, trying to get businesses to go to their state and open up and hire people in those states. And there's all these things that have to do with the reasons why people are moving. So this chart, by the way, are why Americans actually want to live where they want to live, okay? So there's a bunch of reasons why, and we're going to go into that next. But this is very, very, very important. And the question is really, what's going to happen now? Because this is pre-lockdown, okay? So I'm going to try to walk you through 3 things that I think you should be watching as you try to figure all this stuff out and as everyone tries to figure out, where do we invest? Because as Wayne Gretzky said, when he was asked, why are you such a great hockey player? He said, well, most players skate to the puck. I skate to where the puck's going to be, okay? So we're trying to skate to where the puck's going to be, and we want to be there. We want to be there when all these trends go there. So let's go to the next one. So I listed Arizona and Idaho because on this particular survey, they were number 1 and number 2. And the reason why I listed them was because as surveyed, that they had more than a 2% year-over-year growth, and it offers its residents warm weather, so climate, and low taxes, okay? That's why people move to Arizona. Now, there are plenty of places, plenty of states that have lower taxes than others, okay? But I do know from prior experience that a lot of people move out of California, for example, because they were paying very high taxes. So if you're earning, let's say, in fact, I've heard in California, you basically have to work until the middle of the year to pay the government, and the next half of the year is basically yours. Think about that, 50% taxes. So Idaho, why are people moving? Well, they're moving obviously for jobs, but here's the thing that I wanted to show you. What they're really doing is that the housing market is hot right now, but its home ownership is more than just a dream for Idaho. It's a reality, and they move there for the low housing costs, okay? So those are reasons that people were moving before the lockdown. Now, so what we have here is we have favorable taxes, which I think is still going to be a thing, okay? People are going to start to take a look at that. I have a buddy that was about ready to sell his company, and he looked at the state and actually the country before he sold just to save money on tax. So taxes are a thing, guys, okay? Desirable climate, okay? Obviously, California is great, but it doesn't have favorable taxes, okay? So people are weighing that out as an example. Same with Florida. Low housing costs, okay? Now, there's areas in Phoenix and Scottsdale where housing costs have gotten really expensive over the last 4, 5, 6, 7, 8 years, okay? And so now people are choosing areas like Tucson, and some other areas that are not quite as big as Phoenix, as an example, and of course, job growth. Now, we're gonna get into all 4 of these, but these were the reasons that people move, okay? I still think that these 4 reasons are gonna be largely why people decide to move where they're gonna move, okay? So now let's go to the next thing. So real estate trend number 1, people are moving out of high density areas like New York City, like Boston, like Chicago, like San Francisco, like Seattle, like San Diego. They're moving out of high density areas. They're afraid of elevators. They're afraid of multi-floors. They're afraid of using a gym that's a community gym. All of those things, okay? Whether you think it's crazy or not, it's happening. And you can see that there's these articles all over the internet about this, okay? Coronavirus is making some people rethink where they want to live. That is just a couple weeks ago in CNN. Here's another great one that is Get Me Out of Here. America's flee crowded cities amid COVID-19 and consider permanent moves. So this is a thing, guys. We're starting to see it now. I have a lot of friends in New York City, and they said people are fleeing right now. A lot of them have already moved out, and some of them are never coming back, okay? So that is a permanent change that people are definitely going to be reconsidering living in some of these big cities. I can assure you that is going to create a demand drop and a supply increase, and so it's going to affect the prices in those core cities. It has to. So this is a trend that you have to keep watching, because as this continues, there's going to be more supply and less demand. So that is going to be a fact. The next big trend is going to be the rise in the remote workspace, okay? Now, there's all kinds of philosophies on this too, but as you guys know, right now, we're all on lockdown, and so the companies are trying to run how they can, and we're starting to see a steep rise in remote working. Now, this is due to COVID-19, so it's not really a fair chart, but it is an easy chart for you to see kind of where things are going. The real chart is going to be how many of these continue to work here after the companies and the businesses reopen. And that's what this is. This is another great article from Get Abstract, and it basically said from a survey that they did that 43% of full-time American employees say they want to work remotely more often, even after the economy has reopened. So this is a thing. And even employers like myself are considering, do I really need all that space? Can I repurpose that space? Maybe I can use a lot less space. My rent will be less. And the employees, some are fine coming back, and some are not fine coming back. And that's what I'm hearing all over the place, okay? So the employers are trying to figure all that out. What's the right mix? What's the right way to handle this? Do we have people come to the office weekly? Do we have people come to the office monthly? Do we never have them come to the office? So all those things are happening right now, and you're obviously going to see a massive impact on the commercial real estate space, specifically office, as it relates to that. But on the employee side, you're going to see a fairly big increase in home offices and maybe split of roommates. Back in 2008, people were roommating up, and now they might be splitting up because how are 2 roommates going to work from home in a small workspace? So you're going to potentially see a trend of doubling. So you're going to see doubling from lots of things, from families that grow and from divorces and things like that. Those are doubling effects that create more demand on the housing when we have this limited stock of supply right now, because there's not any building really going on other than things that were already in the pipeline from 2019. So it'll be very interesting to see what gets financed in 2020, 2021, 2022 as this demand is created and as the supply gets limited. It should obviously drive some of those prices up as well, depending on where the market is. So let's look at the third thing, and that people will move to affordability, okay? So here's what's happening right now, as you guys know, and we don't know where this trend is gonna go, but this is the CEO of Twitter basically saying all our employees can work from home forever, okay? So think about this. We know that Twitter is based in San Francisco, okay? So Facebook has talked a little bit about this. Google has talked a little bit about this. They're obviously also in California, however, in different locations, and they haven't fully committed to the word forever yet. But they're definitely there through the end of the year. We know that, okay? But this will be an interesting thing to watch, because as people decide to work remotely, the question is, what are they going to do next? So if your CEO, your owner says, we don't need you to come in anymore. We just need you to do your job at home. So now what's going to happen? People are going to start to take a look at things like this. Okay. Twitter is in San Francisco. And not all their offices are in San Francisco, but a lot of them are. And that's certainly where their corporate headquarters are. The average rent for a one-bedroom is $3,700, okay? The averages, however, for San Francisco is $1,700. The average home is about $1.3 million. That's just in San Francisco. Seattle's different, New York's different, Boston's different, San Diego's different. The question is, if my CEO says to me, hey, I don't need you to come in anymore, and I'm paying $3,700, what am I going to do? Okay? Am I going to stay there with a home office and live in San Francisco when I don't ever have to go into the corporate office other than every so often? Maybe. Maybe not. Maybe I move a 30-minute train ride away. Maybe I move a 30-minute car ride away and try to get my rent down to $1,200 or $1,500, and I'm saving $2,000 a month. Maybe, okay? Maybe I decide to move to Scottsdale and fly in once a week, and I can get a house in Scottsdale for $600,000 or $700,000. Maybe. So these are all maybes, but the point is, as the employees are able to do remote work and the CEOs and the business owners are okay with that and they can run their businesses that way, then these people are going to have a lot of discretion as to what they want to do next. And if I'm an employee and I don't want to be in San Francisco because the rents are so high, I might consider moving just outside of it and then just coming in for my corporate meetings when I need to, or going to my corporate conventions when I need to, or whatever it might be, okay? So I think you're gonna start to see a fair amount of movement around. The thing is, we don't know what exactly is gonna happen here. We don't know the migration patterns of the people that are working right now, okay? But I can tell you, going back to the first slide, people are gonna move to affordability. That's my belief, because savings rates have never been higher, and people think that there could be another breakout. They think that some of these businesses might not make it, and so people are fear-based right now. There's a lot of uncertainty, and they're holding cash. Okay, and so these decisions, I believe, are going to drive a lot of migration patterns all over the place. So let's talk a little bit about post-lockdown. So here we are in post-lockdown, and everybody wants to know what's going to happen. And I just rolled out 3 trends for you to watch. And I do believe those trends are permanent, okay? So we're going to see people moving all over the place. But we have 2 buckets. We have bucket 1, which is people that are working, and bucket 2, that people aren't working. And as you saw in my last video, I believe that we're going to have somewhere between 18 and 20 million people unemployed at the end of this year. And they probably are not going to have the stimulus money or unemployment money that they were once getting, okay? So the question is, where do they go and why, okay? But what's going to happen is they're going to look for affordability. Do they really need to pay $1,500, $2,000, even $1,000 of rent? And that's going to create all kinds of movement. In 2008, what happened was Texas was the first state, the #1 state that attracted the most people. And it did it for two reasons. The first was jobs. Texas was very pro-jobs. It was a growing state, and it grew for a long, long time and had a very good run. We personally have a lot of investments there, and we've done very, very well. The second one was affordability. So when we decided to invest in Texas, I was taking a look at the rents in Arizona and the rents in Texas versus the prices. The prices in Arizona versus the rents were higher than the prices in Texas versus the rents in Texas. And so my partner and I decided to invest in Texas. Okay, so Texas had a lot going for it, but now the prices have gone up a lot in that market, and now, of course, migration patterns change again. Okay, the second state was Georgia. The third state was North Carolina, and those grew for also very different reasons. The point is, you're going to see these migration patterns of people moving in and migration patterns of people moving out, and it's going to be based on affordability, how much it costs to live there. It's going to be based on rent, and for the unemployed, are there jobs? So those are the things that people are going to look for next. And please stay tuned, because as I continue to watch this stuff and as I continue to watch these migration patterns, I'll continue this video so all of us together can try to learn, what states are going to be the best states to invest in so that we can make the best decisions for ourselves and for our investors. So thanks for watching.